maybe I should be more thankful for all of the global crises we're currently experiencing. I'm not, obviously. Most of them are very bad news for humanity, but they may well be accelerating innovation.
Hello and welcome back to another episode of Two Blokes Trading. Today's guest is Matthew Le Merle, a Silicon Valley insider who's helped shape the future of investing from both sides of the table. He's backed over 1,000 startups through blockchain, Coinvestors, and Fifth Era. He's got a big thesis. We're not just in the market cycle, we're living through a complete economic transformation.
It's not so much bubbles, because when these things burst, there's still real innovation and technology there. If the late stage valuations suddenly collapse, we do worry about that, but the best companies will still find a way to get to a good exit. You and I shouldn't have to wait 45 or 60 days to close a real estate transaction, and we shouldn't have to document and notarize a huge stack of paper. Fax it to the person on the other end. What's a fax? We've got a long way still to go. We're sort of halfway there. Wars will be won and lost based upon the quality of your AI. I'm absolutely sure of that. If we have billions of AIs trying to communicate and transact with each other, we know that today's payment system won't work.
Elon Musk came out recently and said, working will be optional in the future.
I would agree with Elon Musk. Work is going to be transformed dramatically and jobs are going to look very different. And I don't presume that that's necessarily a negative thing.
If you're curious where digital assets, AI, and network effects are taking us, this one's for you. Matthew, welcome to Two Blokes Trading. Thanks for joining us here today.
Great to be here, Jonathan, and looking forward to the webinar.
For sure. I'm really looking forward to kind of digging more into your perspective on Silicon Valley, innovation, maybe where the world is heading towards. But before we dive into that, how did you get into the world of investing?
Well, it's a long story. My first career, I was a management consultant and a partner at some very big firms, and I would be doing consulting projects for some of the world's largest asset management firms, banks, payment companies, and so on, as well as a lot of large tech companies like Microsoft and Google and Intel and people like that. So I was around Silicon Valley, around innovation, and around investing. And needless to say, a long time ago, that led to a few direct investments, a few angel investments. By the zeros, I was pivoting to be a full-time internet, fintech, and digital content investor. And so now it's been about 25 years. And eventually, one thing led to another. We formed a firm, an investment firm, and then 12 years or so ago, discovered blockchain and became one of the first dedicated asset managers focused exclusively on blockchain. Today, our firm, Fifth Era Partners, also invests in AI. So we are very focused blockchain and AI, and we manage fund of funds, and then we do mid and late stage direct investments as well.
Excellent. And I guess what internal shifts did you go through moving from the kind of corporate world and corporate strategy towards kind of early stage investing?
That's a great question, Jonathan. And I think it's quite humbling because you can be really good at something and discover you really don't know a lot about something else. In my case, I had risen to the top of a number of consulting firms, and my last position, I was co-leading the global digital and innovation practice of one. I had led the technology practice and West Coast operations of a couple of others. And I did know a lot and still know a lot about, I would say, corporate strategy and enterprise innovation, new product development, things of that nature. But when you enter the early stage venture ecosystem, a lot of that doesn't quite apply. And conversely, there's a lot of new things to learn about how do you form a company, how do you fund a company, how do you manage your resources, how do you sort of get started, first product, first revenue, and so on. And it took a few years to get on top of all of that. So that was one transition, Jonathan, going from being a successful sort of corporate type to being a early stage angel and venture investor. And then, of course, once we launched our firm and we became an asset management firm, and now we're launching funds and fund of funds, that's a whole additional set of learnings around, how do you manage a diversified portfolio? How do you support your LPs, your investors? And so anyhow, it's a continuous learning journey. And in parallel, the technology has been changing so quickly. So going back, 25 years ago, we were just trying to figure out, is it possible to download software? And I worked on the first downloadable game with Telltale and Digital Chocolate as an example. Today, we're so far beyond that. Now we're trying to do real-time movements of value globally over the internet. It's a very different set of issues. And innovation is one of the exciting things about being innovation and venture focused is it's always a new set of things coming along.
Sure.
Innovation never stops.
Absolutely. And I guess with these these hype cycles and, kind of crypto booms, AI surges, how do you, stay grounded and within this space, if you like?
Yeah. So there's this good question, Jonathan. And the hype cycle means different things to different people. And you already mentioned you begin as a trader and presumably, therefore, you may also be a little bit closer to the public markets. Hype means different things to different people. So from an innovation point of view, it is true that we occasionally get overhyped innovations and technologies. But what tends to be true in the medium to long term is we mostly underestimate the impact of really powerful new technology. And there's a lot of evidence of that. We hear about something, we don't know what to do with it. Then the first few use cases begin to surface and people start leaning in and taking notice. Then all of a sudden, everyone thinks it's going to happen really, really fast. And that's the irrational exuberance part. And then it all simmers down and the serious builders build and the serious investors carry on investing. So that's one point. But the other point is early, mid, late stage public markets. And here we see dramatically different hype cycles. Early stage, we really don't have dramatic hype cycles. Valuations in most cases are going, X, 2X, 1X, 2X around the cycle. Mid stage, we begin to see more dramatic swings in valuations, 1X, 5X, 1X, 5X maybe. But it's in the late stage where we see remarkable things where you can't get a company funded at all, and then suddenly people want to put $100 billion into it. Yeah. And those cycles really do look like hype and irrational exuberance. And it's not so much bubbles, because when these things burst, there's still real innovation and technology there. But it's more a question of the valuation getting way ahead of its and having to come back. So as early stage venture investors, we don't really worry about what's going on in the public markets in terms of irrational exuberance and exaggerated valuations and pricing. We know it hurts if suddenly that goes away and a bunch of public market investors are confronted by 80, 90% losses because they overpaid and made valuations higher than they should have been. Where it hurts us is there is a ripple-on consequence. Sometimes it's harder to IPO companies. Sometimes it's harder to sell companies if the late stage valuations suddenly collapse.
Uh-huh.
And so we do worry about that. But the best companies will still find a way to get to a good exit. And, whether we get a 10x, a 50x, or 100x obviously makes a difference. But if you're an early investor, a 10x still sounds pretty good.
For sure. And I guess, what does conviction look like to you, Matthew, in terms of how do you know when it's misguided, for instance?
Oh my gosh, that's a conviction also, I guess we can unbundle. There's sort of the conviction that the world's going to change and that something dramatic is going to be unveiled over time. And we can talk about some of our conviction about the future, but just to keep it really simple, we think we're entering a global digital economy where everything will be digitalized and computers will assist human beings in everything they do. And that requires a lot of upgrading of infrastructure, and it requires new innovations and technologies to come to market and to be embedded in products and services that really work. And we got a long way still to go. We're sort of halfway there. We digitalize communications and content with the internet technology stack, but we've only just begun to digitalize value. And we're just beginning to realize that we can create digital intelligence, and that's a very powerful thought in its own right. So this is long-term conviction. Sort of more sort of medium-term conviction is, does this company with these products and services have a lot of growth ahead of it? And here, there's a lot in plain view. It's sort of like, you may think Coinbase or Kraken or Binance is a capable company, but in terms of the portion of the world that uses them, it's de minimis still. Just to put that into context, there's 8 billion people and we have less than 500 million active digital wallets. So you can see most of the world's institutions haven't even begun to play around with digitalized value in all of its forms. So medium-term conviction is more about who's got working products and services, who's an emerging category leader, and who's likely to capture the next wave of growth as adoption plays out. Early stage conviction is a whole different thing. It's, are you a great team? And do you have a big idea? And do we really believe that you can build it and defend it and scale it and make it profitable? And a lot of these questions are not fact-based questions. They're more around, it's more subjective and it's more narrative-based, and it's more about meeting the people and determining whether you feel that they're going to stay the course. And if you talk to the world's best early-stage venture investors, they'll always tell you that the job number one is, do you have a great team? And if you've got a great team, even if the idea needs modification later, a great team will make the changes to their strategy, will pivot if needed, and will carry on iterating. So it actually begins with the team, whereas with a very late stage investment, the team still matters, but you've got a lot of numbers of facts. You can run your discounted cash flow analysis on a real business and come up with some sense of what the value is. So it's a very different equation, late stage for the early.
Sure. So there's kind of the founders, but you've also got then kind of key hires as well at the same time, right? So it's like how you're trading off in terms of, okay, the idea is brilliant, the team's good, but it potentially needs key people within that. So do you look at that as well? Or is it more so just, this is the team, this is what is going to bring it forward? And, because at early stage, that's always the hardest thing, right?
Yes, but let me just say that, again, there's 8 billion people. The entire venture industry of America only backs a few tens of thousands of companies per year, each one of which may have 1, 2, maybe 3 founders. So the total population of technology innovative founders is very small. It's a few tens of thousands of people, maybe a few 100,000 at the most. So truly world-class computer scientists and founders are very few and far between. They're sort of the heroes of this story, and the really good ones have no trouble, attracting brilliant co-founders and brilliant people to work with them. And that is one of the measures of, do you have a great team? A great team is very good at motivating, telling their story, attracting other people, getting lots of people behind them, and so on. Sure. And in the world of crypto, which you mentioned, it's even more true, because a really good open source community-based software project is going to have to motivate a very large number of people to participate. And that requires another skill set again. So I do think, and I'm no different, I think you could talk to Sequoia or Kleiner or NEA or someone like this, and they'd be saying the same thing. It begins with an outstanding team. In what we do, they're almost always computer scientists and developers, and they have more than just coding skills. They are the types of people that can get a lot of other people lined up around their vision, including investors, to provide the capital to make it happen.
Absolutely. And I guess, how do you mentally process yourself when you have a high conviction investment, but it fails?
Oh, failure is the norm. Even for the world's best venture capitalists have about a 60% plus or minus failure rate, which means, those companies don't even return a 1x. They actually lose money. Normally, that means they go to zero. What remains, the 30 or 40%, there'll be a very small number, maybe 10% of projects and companies that get to a 5x or better, they drive almost all of the capital return of a typical venture portfolio. And the residual 20 or 30% of the investments they make will get somewhere between a 1x and a 5x, which is good, but it doesn't really cover the failure. So failure comes with the territory. And you're not a good venture capitalist if you're not getting failures, right? Because it's just not that predictable. It's just not that predictable. Good teams fail all the time. And in fact, good ideas fail because perhaps they were premature. They were a great idea, but just a little bit too early, and so on and so on. There's a lot of reasons for failure. So you can't take failure to heart. I mean, you've got to, you make a decision at the time that you invest, and you know that there's a high probability that it will fail. And a good investor, a good venture investor, is willing to take that risk. Where it gets really painful, Jonathan, is not so much when the thing fails, it's in the year or so leading up to the failure. Because if you really liked the team, you really believed in them, you gave them your money, and things aren't going well, normal human response is to try and help when things still don't go well. And so the whole is getting worse. You're spending more and more of your time, and eventually then the team has to recognize it's not going to work. And that's a very painful part of the process. When you get to the final end of the process and it's like you have to write it off, take a tax deduction or whatever, that you just move on. Sure. But I think it's the year or so leading up to the ultimate failure that is very painful. And I think very good venture capitalists know to be very careful about how much time they give to failing companies. It may sound brutal, but you need to focus your time on the companies that are really succeeding and help them scale and grow. And you really should very much ration the time you spend with the troubled companies. And I know that sounds brutal, but that's the fact of the matter. Yeah. No fund and no venture team have enough time for everyone.
For sure. And tell me, how do you kind of avoid kind of FOMO in fast moving tech sectors, especially? Is there like, you want to jump in, but you don't want to miss out on these opportunities that are moving very fast?
Yeah, so that's a great question. Well, we're long-term investors. So our question is, if there's FOMO today, that's not good reason to invest. The question is, do you believe that 5 and 10 years from today, this is going to be a very big situation, a very big opportunity, a very big product, service, or whatever? If you really believe that, then there is a discussion about valuation, and it could be that today's valuation or expectations are so high that you can't participate. But more normally, that isn't the issue. I mean, I think if you've got a great team out there working on a long-term project that you really believe is going to get to a very large outcome, then the fact that the short-term valuation may be a bit higher than you would like is not necessarily a problem. And we're seeing that right now in AI, for example. Now, obviously, we read in the newspapers the stories of this large tech company or that large company throwing huge sums in the tens of millions or even hundreds of millions at individual practitioners to get them to join their projects. We can't compete with that, and we wouldn't want to invest at those valuations.
Sure.
But I think most early stage teams are gravitating towards the great venture investors in their space, and they're willing to strike bargains where the investors come on board at reasonable valuations. And Jonathan, you know, but your audience may not know that we're primarily a fund of funds in the early stage. So our biggest single investment decision in the early stage is which VCs are we backing?
Yep.
Which is a different equation than which entrepreneurs those VCs are backing.
Sure, absolutely. And is there kind of a fixed framework around that as well? But obviously, in terms of your portfolio construction, right? Like I said, you're looking to back VCs as opposed to individuals. But do you adapt that per cycle, or is there ways that you?
Not so much. It's the funny thing is, Cambridge Associates just did a great report on the blockchain industry, the venture industry in blockchain, and the bottom line was a couple of things. One is it's time every institution has some early stage blockchain venture exposure because it's outperforming other areas of venture. But the other one was it's venture. So all the things an institution has learned about investing in ventures apply to blockchain venture as well. And you get a bit confused because you'll hear about Bitcoin this and altcoin that. But at its core, it's venture investing. So how do you make a good venture decision? We've already talked about that. It's who's the team, what's their idea, can they build it, can they defend it, can they scale it, can they make money, and so on. And then what's a good VC look like? Well, it's a pretty predictable set of questions. Preferably, they've got proven track record. They've been a venture capitalist in the past. They've got a demonstrated record of having access to great entrepreneurs and great teams. They've made smart investments in the past. Their returns are demonstrably good. They run a tight shop in terms of things like audits and operations and fund administration and so on. They have a good team. It's not just one person. It's a team of people. So there's some risk mitigation if one person decides to leave and so on. So it is actually, it's a set of questions and due diligence that every institutional investor would recognize straight away. And whilst there are nuances in blockchain or AI that make them a little bit different, don't throw the baby out with the bathwater. It's 95% venture investing, and yet it's performing better than most venture investing. So that's why Cambridge Associates is saying every institutional investor should have 1 or 2% of their capital allocated to blockchain venture.
I guess talking about blockchain and crypto as a whole, we're moving to a different place with regulation as well at the moment, right? Just while you touched upon it. Do you think this legitimizes the crypto space more, or do you think it hinders it?
Interesting question, Jonathan. I don't think laws and regulations legitimize high quality products and services that deliver value. Okay. In other words, value is created because someone builds something that the world needs and it does a better job than the other things that went before or compete today. And if a technology or an innovation unlocks value in that way, then I believe they deserve to succeed. And certainly in the area that we are focused on, the areas that we're focused on, the value is demonstrable. It takes a long time, it's very difficult, and it's very costly to move value, to make investments, to buy insurance, to move your money domestically or internationally. And the blockchain technologies are enabling almost real-time, almost no-cost movements of value in secure ways. And that is huge value unlock. The same in AI. It takes time for us to get our questions answered and to get support for whatever we're trying to do. And AI intelligence is making all of that quicker, cheaper, easier, and is opening up things we couldn't have imagined before. So what's the role of regulation and law in all of that? It's to put guardrails that enable people to do things in ways that are legal, we try and get rid of the negative externalities and the bad actors and the bad practices. And all of that is necessary. But going back to your question, law and regulation do not legitimize value creation, consumer benefit, and innovation. They simply enable it to scale faster and in the guidelines that society wants it to scale within. And the problem for blockchain of the last 4 and 5 years was that we had administrations that didn't want to support this innovation, regardless of how much consumer benefit it was unlocking. Now we've turned the corner and we have almost every regulator in the world, or most of them, wanting to help these technologies scale. And so I don't view it as a validation. I just view it as governments and lawmakers appreciating that they're there to serve their citizens. And if they can unlock consumer benefit and value for their citizens, they should be supportive of that, subject to, as I say, controlling the negative externalities and the bad actors and the bad practices, which, by the way, innovation, unfortunately, is a place where some people push the envelope many of the first adopters of new innovations have been not good people.
Yeah.
And that's not a blockchain statement. That's an innovation statement. You can pick any innovation you wish, and there'll be people trying to figure out how they push it to the limit to make more money or whatever. And that's something that governments are expected to help mitigate.
Sure. I think with this kind of technology, it makes us realize how antiquated our banking systems are and the technologies that exist are there. I think it's these companies can see the value in speed, and everything is turning to speed at the moment. And the value within the technology is incredible, and it is bringing us in this direction, whether people like it or not. So it's kind of like get behind it or get left behind.
Yes. Well, and it takes a while, Jonathan. It takes a while for someone who is building something that consumers like, and they're making a lot of money doing it. It takes a while for them to realize that they need to change. And so we saw that back in the 90s with the internet when, we always use the blockbuster quote, we don't need the internet and downloadable content because we got a blockbuster on every corner. You can just come in and get your CD or DVD. And it wasn't that they were doing a bad job, and it wasn't that they were trying to be bad people. They actually thought they were doing a good job and that DVDs and CDs were sufficient for most people. Mm-hmm. They didn't yet understand that real-time downloading was going to be so much better for consumers. And it took them maybe 2 or 3 years to get their head around that. And in the interim, of course, they went bankrupt. And I think that's the case with banks today. I don't think that whatever the number is, the 100,000 people that work at JP Morgan wake up every morning saying, let's stiff the customer. I don't think they say that. But I think they don't appreciate that the slowness and the costliness of the way they do business is now obsolete.
Yep.
And in fact, we can move value quicker, cheaper, easier, and more securely. We can make investments happen much faster. You and I shouldn't have to wait 45 or 60 days to close a real estate transaction. And we shouldn't have to document and notarize a huge stack of paper.
Mm-hmm.
Fax it to the person on the other end. What's a fax? We have a generation of people coming that don't even know what faxes are. Can't imagine that they have to print something out, sign it in Fender. So I don't think the banking industry or the payment industry or the asset management industry are purposefully trying to do a bad job. I think it's just taking a while for them to wake up to the reality that these innovations will allow them to deliver much more consumer benefit, and that consumers ultimately will move to the better, cheaper, easier solution. And that's happening as we speak.
Absolutely. I couldn't agree more. And I guess from a macro standpoint, do you think geopolitical risks kind of accelerate, or do you believe they kind of stall innovation in the likes of blockchain and AI?
No, that's a great question. And I haven't necessarily I don't think I've thought about that question, but let's just unpack it a little bit. Necessity is the mother of invention, and geopolitical circumstances can lead to enormous innovation because it's like your life depends upon it. Or I say your life, it could be your life, but it could be your statehood depends upon it. So as just to use a crude example, if you watch, there's enormous innovation going on right now at the front line of the battlefield with the iteration of drones and drone warfare and things like this. And it's not that people weren't trying to make better drones already, but I just read something, for example, that the US government has sort of reverse engineered some of the very low cost, easy to use drones coming out of Eastern Europe and the Middle East, and has created a new generation of technology for the US. So that's an example. But the point is, I would absolutely believe that geopolitical challenges and stresses would accelerate innovation in the areas of technology that are relevant. And AI, of course, is one of those, right? And wars will be won and lost based upon the quality of your AI. I'm absolutely sure of that. Now, blockchain, a little bit less so, but I think the two are connected, because if we get into a world where you can't trust communications because you don't know who they're coming from in terms of, is it a person, an AI, a spammer, a phisher? Then I think things like digital identity and clear provenance of communication or value, or who am I dealing with, that becomes really important. So as of today, blockchain is the best technology we have for securing and resolving questions around things like identity, provenance, trust. So I actually think the rapid evolution of AI is actually going to greatly accelerate the adoption of blockchain. And nowhere more, I can give you an example that just makes that really obvious, which is if we have billions of AIs trying to communicate and transact with each other in tiny little increments of value, we know that today's payment system won't work. So we're going to have, those AIs are going to use digital monies, you can call them crypto monies, if you will, just to affect transactions between each other. And the volume of those will be enormous, and the value of them per transaction may be very, very low in fractions of cents. And that will require us upgrading, crypto or digitally based global payments system that can cope with device-to-device computing and transactions. So that's an example, but I think it's a really good question, Jonathan, and maybe I should be more thankful for all of the global crises we're currently experiencing. I'm not, obviously. Most of them are very bad news for humanity, but they may well be accelerating innovation.
Absolutely. And I guess that same point goes to traders as well. And, there's that kind of the trader hat that that you can not exploit, but you can make good money from situations that are not so good for humanity. And I guess that's the same in a lot of different directions. And it's trying to have, each hat on, I guess, but at the same time, you have to take opportunity where it arises. And tell me, with quant computing coming, do you think that's going to have a big kind of change on things? I think that can, we've only scratched the surface in terms of what we know about what quant can do, but really that can change things as we know it, right?
Right. People have been talking about quantum computing for a long time, and I think some people disagree about how quickly it will be with us. Let's presume that the optimists are correct and it's going to be with us very quickly, in the next handful of years. And what does it mean? I think it's more than just a acceleration of computing power. Obviously, there's a bit of a step function, is my understanding. But we have been seeing a continuous ramping up of computing power throughout our lifetimes. So if this accelerates computing power even more, I think that it will enable a lot of the applications and use cases that people are imagining to just be easier to reach. So as an example, you and I are probably using ChatGPT right now. There's a lot of computing that goes into answering our very simple questions, but we don't necessarily have enough computing power to cope with 8 billion people all trying to use ChatGPT at the same time. And we're not there. Even though you and I use it, most people in the world aren't using it. We need much more computing power, and we can do that in two ways. One is just do a lot more of what we currently have, and that's these massive data centers that people are funding and putting into position. The other is to improve the computing capability so that we don't need massive data centers. We just need much, much faster, more capable, larger capacity computing engines. If that's what quantum computing ends up being, I think it's mostly, again, an enormous accelerant to our vision, which is of a global, comprehensive digital economy, imbued with intelligence in everything we do. So I think for us, quantum computing is an enormously positive accelerator. Now, there will be collateral damage, and one of them that everyone's talking about right now is security. Will quantum computers be able to crack security systems that we use and rely upon today? And the answer apparently seems to be yes. But that begins with every bank, every government, every database, every enterprise is now, doesn't have a fig leaf anymore. So what do they need to do? They all need to upgrade their security.
Yeah.
Crypto is in a much better position because crypto already has a reasonably high level of security, and the developers have ways to upgrade security more easily, not that it's easy, but more easily than legacy computing systems. So if you remember year 2000, the reason why so many hundreds of billions of dollars were spent was because it was not centrally connected and you couldn't upgrade everything remotely, right? Today, if we had to upgrade the Bitcoin blockchain, and if the developers could agree on how they want to do that, it wouldn't be easy, but at least conceptually they could do it in a much more easy way. It's sort of, for a layman, it's sort of like, imagine trying to upgrade every legacy car in the world to do something cool and new. It's going to be a lot of work, and you have to drive all those cars into the shop. Tesla just pushes down a software patch and upgrades your computer remotely, and they can do that over a period of a couple of days, and no one has to do anything more than plug their computer in and accept the upgrade. So quantum computing, net, I think is very good for computing. It's very good for a global digital economy. I think it will greatly accelerate the innovations we're backing, but it does have a few major concerns attached, and the biggest single one is security. And then I feel better about blockchains being upgraded for Bitcoin or Ethereum, Solana or whatever, than I feel about the notion that every government, legacy software program has to be upgraded. I mean, that's a nightmare if I ever saw one.
Sure, 100%. And if we think of the last 10 years, where we've come within technology, how far we will come in the next 10 years with the continued development, it's quite scary. Obviously, we've got humanoids and so many other things that are coming our way very quickly. But within that, and market structural changes, what do you expect the landscape of kind of venture capital to look like over the next decade, let's say?
Okay. So, Jonathan, I want to double click on something you just said. You said it's scary. Why did you presume that it would be scary?
For me, it's scary in terms of how quickly, how rapidly things are changing, how we can keep up. We spoke about security, for instance. We spoke about how everything is changing. Like we're talking about removing cash, like a cashless society. We're looking at control functionalities over people. We're moving so quickly, and legislation is being passed without even people knowing about it. There's so much happening in front of us that, can we keep up with the next 10 years in terms of how quickly things will change? AI, quantum computing, how much of that will even get access to the general public, because they have to feed the general public information in very small doses, because they don't want us to know everything simply. But yeah, world is changing. I think 10 years time, I think we're going to see a very different landscape.
Yeah. So the reason I stopped you there, Jonathan, was because I think this is really important for the audience to think about personally and individually. Yes, the future will be different. Yes, we will see changes. The question is, how do you feel about that, and how do you respond to it? And 95% of the world takes the following response. It's sort of like, I know what I like about today, and I know what I don't like about today. I fear what the future might hold, and I can't see the future goods that I don't yet understand. And given that, and the fact that the front of our head, our amygdalas are wired to make us fearful of uncertainty, 95% of people respond the following way. They basically respond as, I'm fearful that I'm going to lose today's goods, and I'm fearful of the bads that may come in the future. And so I'm just fearful. I'm fearful of change. I'm fearful of innovation. I'm fearful about all of this. If you take the other view would be one that sort of says, well, innovation and change can solve today's problems, and it can also bring to us unimagined goods in the future. And that vector is a very optimistic vector. It's a vector that says the future is going to be better than today. And I can't see it. I can't see it in detail. I don't know what all of the future goods will be, but they've always been good. I mean, there are bads there as well, but if you go over the last several hundred years, human beings have mostly gone from one good to another. Now, we've lost a few things along the way. I'm not saying progress is always up and to the right, but mostly innovation solves today's problems and unlocks future unexpected goods. So
I absolutely agree with that point, right? Just not to cut across you, but I guess from my perspective is what I would say back to that is we've had time to transition to where we are now. I think that transition time to get where we're going to get to the next year is going to be so accelerated. And the biggest thing is there's a smaller amount of people controlling that power.
Well, okay, two different points. Jonathan, really good points. So if 95% of the people take the fearful vector on change and 5% take the optimistic, positive view, the optimists are the innovators, and they're the ones that Steve Jobs famously said are the mavericks, believe they can change the future, and they do. In a time of more rapidly accelerating change, I would argue that what you need to try and develop is not only that optimistic mindset, but in addition, a great deal of flexibility and a willingness to embrace new things and do so quickly. If you are one of the 95% of people that are resisting, it's going to feel really bad if the pace of change is accelerated. You're always going to be in a very negative way. Now, you then said the other point, which is all of this is controlled by a small number of people. And I don't believe that for a second. I do think that there are concentrations of power and value in terms of innovation, but I don't know that all the world's new innovations are going to be controlled by those same people. And I don't think those people are so much governments as they are the leaders of the techno giants. So, will it end up being that the future is owned by a small number, Microsoft, Amazon, Samsung, Huawei, and do they control us and our lives? That's one potential future scenario. But I personally think that innovation is unlocking more distributed and decentralized activity. And in fact, that curve is probably going to begin to reverse at some point. But I don't know for sure.
Yeah.
I don't know for sure, Jonathan. And in fact, I did a thought experiment. You can all do this at home. I asked ChatGPT to paint me 12 equally plausible futures of a digital economy powered by AI. And I wanted those to be very different futures. And it came back with 10. And it was interesting because I read the 12, and they were everything. And they were, it was the Borg, it was the Matrix, it was a decentralized distributed utopia. I mean, there were so many, and they were all plausible. So, Jonathan, that comes back to another point. If you start off believing the future's going to be grim, it's pretty unlikely you're going to capture too much of the advantage of a positive future if it occurs. Whereas if you strive to build a positive future, you could be a leader in untapping a lot of the value that does get created. So I still think the innovator mindset trumps the 95% pessimistic outlook that most people have.
I agree. And I'm excited. Even the last 12 months has been exciting for me, utilizing AI in so many different ways and the opportunities that exist. I guess with most people's viewpoints, it's like there's different levels of different classes and so on. And it's like, what are them changes going to be to those different people? And I think everybody will have a different perspective based upon their own standing, their own situation. I guess. And that's the key thing here, right?
Yeah. And I do agree with your point. I absolutely agree with your point that the time of transition could be a painful period and it may be shorter than we would like. So I'm not disagreeing with those comments. And I think by the time you get to the level of workforces and large
Or the lack of.
Yeah, it may not be that the future comes as only a positive surprise. There may be some negative consequences of a rapidly approaching future for different groups of people and different industries and different types of businesses.
There's no doubt there people are going to the world is changing to a place. I think Elon Musk came out recently and said, working will be optional in the future, and whatever you meant by that comment, you could take it in different ways. But, there's no doubt that AI is going to take over a lot of jobs.
Well, yes, but we don't have time today because we're nearly out of time. But we could go down the path of, well, how do you define work and how do you define a job? And, maybe today's definition of work, if today's definition of work and a job is you sit in a cubicle all day long in an office you don't want to be in, and you have to get up in the morning and look at a small screen, then go and sit at a desk and look at a medium-sized screen. And by the time you get home, you're so burned out, all you can do is look at a big screen. Is that really the definition of work that you want to perpetuate?
Absolutely.
And could you imagine a world where the work that you do is something that you would be more excited about doing?
Absolutely.
So it's an interesting one. I would agree with Elon Musk that work is going to be transformed dramatically and jobs are going to look very different. But I don't presume that that's necessarily a negative thing.
For sure. And finally, are there any exciting projects on the horizon for yourself at the moment?
Well, going back to the beginning, because we started off somewhat, pragmatically talking about venture investing. We've spent the last 5 or 10 minutes talking about the future and innovation and what it might hold. I'll just come back to the beginning. I mean, we are early stage venture investors in blockchain and AI, and we are fortunate to be investors in 50 or 60 of the world's best venture firms focused on this space. And we do mid and late stage investing too. And I would say, Jonathan, that almost everything we're touching right now, I find very exciting.
Yeah.
And I'm very motivated by it. And the good entrepreneurs in AI and blockchain are really, I think, unlocking a lot of value for all of us. And the value of their projects and companies is going up very significantly. And we're lucky to be an investor in about 80 unicorns through our fund of funds.
Wow.
And I think there's going to be a lot more. I think, if you were a trader and you had to pick, a set of things to invest in and a set of things to short, I think blockchain and AI are in the set to go long on. And there are, meanwhile, other industries and ways of doing things that I think are going to get diminished. And I'm just very excited that every day we're spending most of our time at Fifth Era focused on the things that I think are very much a part of our futures.
Absolutely. Without people like you, where would we be? I think it's fantastic what you're doing. And it's amazing to see how excited you are about the future and what it holds and how technology will improve things. And it's been really exciting to hear your view on all of this.
Thank you, Jonathan. But I have to say, it's not about us. It's about the entrepreneurs. All of this is predicated upon entrepreneurs and innovators who have that view of the future and make it happen. And we're just lucky that we happen to give them capital and benefit from all their hard work. So the heroes of this story are the innovators. It's not the...
There's no doubt. Absolutely. And people don't see the hard work and the long hours that go behind it. Matthew, thank you so much for coming on. It's been a real pleasure.
And thank you for having me.
Thank you.